Good weekend, traders. This is my weekend video for Monday, and some things that happened in the markets. On the weekly here on our SPY, we came down, or on the daily here, we came down to the 200-day moving average, threatening a uptrend change, and rallied back with vengeance there Friday. It was quite amazing the rally back. Now we're by no means out of the woods, but it did improve. Crossing that line, a closing price below that line or near the 200-day, that means we're going to see some more continuation. I want to point out we had a bounce on Friday, but in my opinion, it is not a healthy bounce. We had a lot of that, or a significant amount of that move was the last half an hour, and it was computer driven, and there wasn't a whole lot of volume supporting that move higher. Typically, on a bottoming pattern, you want a P formation, where most of the volume for the day is at the top of the range, and that signifies a capitulation bottom, and we're not seeing that on SPY. So I'm not overly optimistic how long this bounce can happen. So on SPY, what I'm kind of seeing here, a possible move. First of all, we have to get over Friday's high because we do have some reference volume there. But if we were to manage to get back over Friday's high on SPY, then I'm thinking somewhere around 266.70 is still a shortable point because we're inside the cloud. This is a more bearish tone, and our cloud is turning downward on a SPY. The Qs just missed their 200-day moving average, and they have a similar profile. I'll show you here in a second. But it came to the top of the cloud. This is a little bit more bullish. If we were managed to open at or above Friday's highs, this is a more bullish take on the markets. So just keep that one in mind. We do have overhead resistance at the 158.55 area. That was prior highs before all this market back in last year. So we have broken below the year high, the year open. Okay, just keep that in mind. So we do have all this year inventory right above our heads. So this is still a shortable point until we can get some responsive buying to push us back into the positive for the year. Whoops, wait a minute. And as you can see on the volume profile, this does not signify a very good significant bottom on the Qs either. So very easily we could wake up Monday morning and come in with a red day in the markets. On our IWM, who has really been lagging this market, we did manage to close above our 200-day moving average, which is the third time, and regain our fib fan support. But I want to show you on the shorter time frame exactly how that happened. We literally pushed above that on the last half hour of trading when the algos kicked off for rebalancing. So this is not a strong indication that the IWM is going to be saved here, because a closing price below this trend line means we have a trend change. So we are right on the precipice of potentially a breakdown in IWM. So I did take IWM calls thinking we are going to get some responsive buying here. And basically, if you're a bounce off the bottoms, the trade would be back to 150 on IWM and then reshort it. Some things that happened Friday. Tempur came out and they bought a whole bunch of 320 March calls on Tesla, and that right there was the thing that seemed to change sentiment into the end of the day. It started with that, and they caught it right down here on the bottoms, and we were threatening a trend breakdown. Okay, and basically this line is established from the very long-term up run that the Tesla has been in, and we were tagging that Friday, and then this is our this black fifth zone. This is a shorter time frame, and we were also threatening to break that down, and that's right when Temper came in and protected the stock, and buyers came in and supported price. But I'm telling you, uh, Tesla's burning through a heck of a lot of cash, and if we are truly heading into a bear market, Tesla is going to be significantly punished. So if we ever get a closing price below Friday's lows, uh, there's going to be long-term troubles for Tesla. Okay. And then I also want to show you on the volume profile. You see how it's all evenly distributed here? I mean, this was not a capitulation sell-off. And that's typically what you would mark as a bottom. So I'm thinking there's going to be a lot of pain for Tesla coming up. Okay, on my weekly with Facebook, and this was what I was looking into Friday because I came out on the opening rally on Facebook and I shorted it and I made some decent money on it, all the way down to it managed to come down to the 200-day. It came down below the 200-day weekly SMA, and so it was a good run for the Facebook to the downside there Friday. Okay, it came down to the 200-day daily SMA too, and then it rallied back up hard. But this still is not a very good chart pattern. It has broken the primary uptrend, and now we finally have a closing daily price. That's the second day in a row we've had a daily closing price away from the primary uptrend. So I'm thinking we are at the very least heading into a sideways consolidation on Facebook, or we are possibly rolling over to a lower price values. So be very careful. And we have completely, like I said, broken the primary uptrend. The secondary uptrend would be right here. That would be act as support for Facebook if we get some responsive selling. And we haven't even cleared the daily cloud. And basically, they came in and defended. We had a breakdown of trend on Facebook there Friday, and they defended it the last hour of trading, and the algos pushed up the very last part of this move up. So it's very precarious that Facebook could see some responsive selling continuing even this week. Caterpillar. That's another stock which, unfortunately, I'm holding right here. I thought we were going to hold this primary, this long-term uptrend line. Well, we broke down last week below that uptrend line, and now we're breaking a secondary uptrend line on our Facebook, okay, or on our Caterpillar. As you can see here on our monthly webs here, this is a responsive sell point area for Caterpillar. So we're at an area of price resistance. You can see by the volume distribution here that, and we're inside the cloud. So it suggests to me that Caterpillar is going to have some troubles the rest of this month. And if you look on your daily here, volume was being accepted at lower prices today. Okay, and finally at the end of the day we got to push up, but this is not a stock that's looking very healthy for the upside in the not so distant future. We have come down, back tested this breakout move on BABA here, and we're coming down into high volume points of control here. So this could go either way, but we're right at the trend lines here on BABA, suggesting that the accelerated uptrend could be breaking here. We popped below that Friday, and then we popped back up. But I think that we're going to be breaking back down into range, and BABA's going to be coming down to, well, basically, this line right here was the 4 months ago earnings. So I'm thinking we're probably getting a price back to 163.50 area for that earnings date 4 months ago. So, or is it 3 months? Yeah, 3 months ago. So I think Bob is in a lot of trouble here. We are on trainer support if we do get some responsive buying. I know there's a lot of people who are bullish in this name. I am not one of them. Okay, depending on how strong the markets are, Boeing is an exceptionally strong stock. Okay, and they were fine buyers on Boeing at the closing price Friday. Okay, I do want to point out is this accelerated move that we've had since last July. We are threatening a cross as of close Friday. We actually came down and we regained it, and we have a primary uptrend line here, but there is, even despite the move to the upside there Friday, there is a solid case that Boeing is starting to fall out of favor here. So just keep that in mind. If you go on the daily chart, you can see it better. Uh, you see how it actually closed right on this trend line, and it popped below two days last week, and it's come right back to that primary trend line. Um, it's trying to defend this upper distribution area, and we are at a volume point of control. So this is a reference buy area for Boeing. Just keep this on your watch. This is a more bullish chart, but and it was amazing that it was able to regain what it did. So it will go with the markets. And if you look on the 30-minute, this is pretty much even distribution above and below this primary trend line. And unfortunately, we had a lot of that volume that last 30 minutes when the algos were kicking off. So at least on the 30-minute chart, this is a slightly more bearish take on Boeing, in my opinion, if you take out that last 30 minutes of trading. So it's anybody's guess how it's going to go, but just something to keep in mind. Another thing that was going on Friday, after the Tesla sweepers came in, there were multiple sweepers in the SMH index, and that's the semiconductor index, and it didn't even make it down to the 200-day. It had an early recovery. So a lot of bullish sentiment in the semiconductor space. So keep that one in mind. And if you look on your other profile, and you can tell the volumes that were coming in Friday, they were slightly, the volumes were really kicking into the upside. This is a slightly better P formation. Not exactly perfect, but this is a more bullish sector coming into the first of the week. Okay. Now, if your semiconductors do catch a bid, you're probably going to get a bid in your Intel Corporation. This is a little bit. It's inside of value here, but as of the current price, we have broken the primary uptrend for Intel, so we do need to see some responsive buying coming in the first of the week. Nvidia had super great earnings, and we had a horrible tape Friday, and that's the only reason I think it didn't rally the way it should have. This is a momentum chart. The momentum buyers are still getting on board this one because there's not much overhead inventory on this one post earnings. So if buyers do show up in this market, this is a name that should be seeing the action. And I'm thinking a move up to the 262s, 265 area in the not so distant future is likely if markets do catch a bid. The risk reward is worth it, so I did take some Nvidia calls into the close, thinking if we do get some buying the first of the week, that Nvidia is going to be one of the main beneficiaries from it. Okay, Apple. The reason I mentioned Apple is that it is below, or it's right at it. Today's high was right at last earnings close. Okay, if there was ever going to be a bounce in Apple, right here is where it should happen. So that's why I took Apple, despite the fact of being under the 200-day moving average. Once it closes Friday's highs, there should be responsive buying in Apple, and there are massive stock buybacks going on with all the repatriation of the dollars from overseas. So just keep that in mind that Apple could be a very good upside candidate here. And I really love Apple here. I mean, this is the best chart of all the ones I've showed you. This is the best P formation as of Friday for upside motivation. So just keep this one in mind. Very good pattern, very good potential. I want to keep my video short, so I want to point something out here. Goldman Sachs came down to its 200-day, was it daily? Yeah, came down to the 200-day SMA. Okay, and I had, you notice it didn't quite touch it. I had my orders for Goldman Sachs, Bank of America, and Citi all, it was about 50 cents to go, and I placed my bids 10 cents under what was going at the time, the bid at the time, and I didn't get filled on any of them. So the moment that these banks got close to these levels, there were absolutely nobody willing to sell their call options at those lower prices. And so that, to me, that happened right after the whole Tesla news happened, and that was a screaming buy to me to the long side that the markets were going to catch a bid. And boy, did they ever! And in my prior videos, the last video, I had mentioned just all the support that was in the XLF coming into Friday. And boy, did they buy it up with a vengeance. And it turned out Cities was one of the top 3 options, percentage gains after having a horrible open for the day. They ended up being one of the best percentage gainers for the day by the end. It was amazing. It was like 1,000% gains if you'd have bought at the lows on Citi out of the money options and stuff. Okay, that's all. This is one of my longest videos. I'm sorry if it's too long, and maybe I hope it's informative and gives you an idea here. But with Apple catching such a P formation on the bottom, I have strong belief that we're going to get some responsive upside action, even if it is for a short-term bounce. So that's all I got to say. Thanks a lot, and be sure and like the video if you like it, and add comments at the bottom, and you can follow me on Twitter, same handle. Okay, thanks.